In this section, we will look at how UK house prices jumped to a record high in May, outperforming historical averages and reaching an average of £372. This was a 1.8% increase from April and a 3% increase from a year ago. The rise in house prices was driven by a number of factors, such as a delayed response to the high levels of market activity since the start of the year. Many buyers who started their search in January or February completed their transactions in May, boosting the demand and prices. A better economic outlook and steadier mortgage rates. The UK economy grew by 2.1% in March and is expected to recover further as lockdown restrictions ease. Mortgage rates have also stabilized after rising sharply in late 2022 and early a lack of supply of homes for sale. The number of homes for sale is still below the pre-pandemic levels, creating a shortage of choice for buyers and putting upward pressure on prices. A strong demand from first-time buyers. First-time buyers were the largest buyer group in 2022 and look set to be a strong source of new sales again. However, they face affordability challenges as the income they need to buy a 3-bedroom home has increased by £7,350 since the UK housing market is more balanced than it has been for years, with buyer demand and sale numbers recovering while house price growth slows. However, regional and local variations remain, with some areas seeing higher or lower price growth than others. The highest annual price growth was recorded in Wales at 4.8%, while the lowest was in London at 0.5%. Some parts of inner London and Aberdeenshire even saw modest price falls of up to -2.1%. The UK House Price Index is based on data from HM Land Registry, Registers of Scotland, the Northern Ireland Statistics and Research Agency, and Zoopla. It shows changes in the value of residential properties across the UK. The index is updated monthly and covers all transactions completed in that month. That's all for this section. In the next section, we will explore how UK house prices have squeezed out first-time buyers in May and what can be done to help them get on the property ladder. In this section, we will look at how buyer demand and sale numbers recovered as the economic outlook and mortgage rates improved, despite the Bank of England's interest rate rises. The UK housing market has been on a roller coaster ride since the start of the pandemic. After a sharp drop in activity and prices in the first lockdown, the market rebounded strongly in the second half of 2020 and early 2021, boosted by the stamp duty holiday, pent-up demand, and changing preferences for more space and home working. However, since the summer of 2021, the market has started to cool down. As the stamp duty holiday ended, affordability pressures increased and supply shortages persisted. According to Halifax, average house prices fell by 0.3% in April 2023, after 3 consecutive months of growth up to March. The annual rate of house price inflation also slowed to 0.1%, the lowest since October. But despite this slowdown, there are signs that buyer demand and sale numbers have recovered in recent months, as the economic outlook and mortgage rates improved. According to Rightmove, UK house prices dipped for the first time this year in August 2022, but buyer demand was up by 14% compared to August. The number of sales agreed was also up by 10% year-on-year, suggesting that buyers were keen to take advantage of low mortgage rates and secure a home before prices rise further. Mortgage rates have been at historically low levels since the Bank of England cut its base rate to 0.1% in March 2020 in response to the COVID crisis. However, in November 2021, the bank raised its base rate to 0.25% and then again to 0.5% in February 2022, as inflation surged above its 2% target. The bank has signaled that further rate hikes are likely this year, as it tries to rein in inflation and support the economic recovery. But despite these rate rises, mortgage rates have remained relatively low and stable, as lenders have competed for customers and offered attractive deals. According to MoneyFacts, the average 2-year fixed-rate mortgage was 2.01% in May 2023, down from 2.04% in April and 2.09% in March. The average 5-year fixed-rate mortgage was 2.28% in May, down from 2.31% in April and 2.35% in March. These low mortgage rates have helped buyers to afford higher house prices and offset some of the impact of higher interest rates on their monthly payments. For example, according to MoneyWeek, a £200,000 mortgage with a 2-year fixed rate of 2.01% would cost £847 a month over a 25-year term. If the interest rate rose to 2.5%, the monthly payment would increase by £54 to pound, but if the house price fell by 5%, the monthly payment would decrease by £42 to pound. Of course, not all buyers have been able to benefit from low mortgage rates and improved affordability. First-time buyers have faced particular challenges in entering the market, as they have had to save larger deposits, pass stricter affordability tests, and compete with cash buyers and investors. According to Forbes Advisor UK, first-time buyer-type properties reached a new record price of £224,963 in May 2023, and buyer demand was 11% higher than it was in this period. And however, there are some positive signs for first-time buyers too. According to Halifax, rents have continued to rise sharply, which has pushed more first-timers onto the property ladder. In May 2023, Skipton Building Society launched a new 100% loan aimed at renters who want to buy their first home without a deposit. The government has also extended its Help to Buy scheme until March 2024, which offers equity loans of up to 20% or 40% in London for new build homes worth up to £600. In conclusion, buyer demand and sale numbers have recovered as the economic outlook and mortgage rates improved, despite the Bank of England's interest rate rises. However, there are still significant regional variations and affordability challenges for some segments of the market, especially first-time buyers. The future direction of house prices will depend on how these factors balance out in the coming months.